Hello friends, welcome again. So this video we're going to look at 4 stocks which have very good potential to move around 50% in the next few months and even higher in the next many years. Right, so these 4 stocks, basically I carefully pick them after going through many stocks every weekend, and I share this to my subscribers of my newsletter. So this is the newsletter that I send to my subscribers. So there are more than 1500 subscribers, in fact 1600 this week, and it's just been growing and growing and growing. So we are in the 13th edition and we already have 1600 subscribers. So if you haven't subscribed yet, do consider subscribing to this newsletter. I'm sure it's going to be very helpful for you to understand markets, especially if you do not have the time, and if you're working full-time, then this newsletter would be a very good input for you to understand and get a feel of how the markets are doing, because I give my view on the Nifty for the short term, the medium term, and even I also tell if the investors should be holding to the stocks or not. Right. So I start off with the Nifty outlook. Then I also cover a sector to watch it for. So this week I've covered the PSU Bank Index, and then I cover a market breadth, which is not that very important, but for traders especially, this should really be important. And then I cover 4 picks every week, wherein I share 4 good quality companies which could probably give good returns, and these are picked based on fundamental analysis and technical analysis, and I do share this every week with my subscribers for free. Right, so if you haven't subscribed yet, do subscribe to my newsletter. But if you've already subscribed, don't forget to share this with your friends or with your family relatives, so that they also benefit from this massive bull run that we've been having. Remember, this bull run has still a much longer way to go, so don't just sell off your stocks, and do read my newsletter to understand at what phase of the bull market we are in and what's the current trend, whether you're in a downtrend or we're in an uptrend, how long this might continue. All this insights are provided in this newsletter, so you might want to subscribe to this newsletter today. Now, before we get into the stocks video, I just want to cover this sheet which tracks all the stocks that I've given till date. So till date we've had 13 newsletters, so 13 and every week we give 4, so around 52 stocks have been recommended till now, and some stocks have its stop loss, and we have exited those stocks. Now remember, in markets, stop loss is very important because it's your money and you need to know when to get out, and this applies to any aspects of your life, your career. You need to know when something doesn't work, and you need to know when you want to get out of that particular thing. The same thing applies to markets, and that's what even I do. So till now we have closed 10 trades of the 52 trades we have shared, and these 10 trades also, if you've seen, I've given a clear allocation of 5% on whatever capital we have. Do not allocate more than 5%. So this is the stocks which have hit stop loss, and we have not lost more than 10% in any of the we have not lost more than 10-15% in any of the stocks that we have recommended till now. Right, so if you see, it's been highest as 16%. That's what we've lost, but that's on a 5,000 or 5% capital. So on a 5% capital, if you lose 16%, it's not much. But on the positive side, if you look at the stocks which have done well, then we have 1 stock which has given above 50% return, 3 stocks which have given 30 to 40% return, 1 stock has given 20 to 30% return, and we had 6 stocks in the 10 to 20 category, and we've had around 19 stocks which are in the negative for now. Now this is primarily because of the weakness in the small caps and mid caps, and even though the markets are weak, we continue to hold some of the stocks, and unless the stop loss is not hit, we might not exit the stocks. Right, and no one knows how far this market can, how much higher it can go or how much down it can go. All we know is at this point where should be my stop and where should my exit point. So I give this clearly, and I mention this for each and every stock I recommend. And along with this sheet also has the stock, the sector, because if you're interested in only stocks from a particular sector, then you might want to look at that. And also what's the market cap. Now this gives you an idea of how big the company is. For example, a company like Kitex is a very small company, but for example, a company like Sun TV is kind of one of the leaders in the South Indian space, TV space, and it has a decent market cap. Biocop is one of the biggest agrochemical manufacturers, and we had Ian Sale, which was recommended recently, which is one of the biggest steel companies in India, and we also recommended NMDC in this week's newsletter. We'll look at that shortly. And then I track or I filter companies based on the ROCE, which means if the company is deploying 100 rupees, how much returns are they making on that 100 rupees? I do not want to invest in companies which do not have a positive return on the money that they are deploying. So if a company is making If a company has a ROC in the negative, then I would strictly not look at that company. It doesn't matter if it's COVID or not before COVID. I just ignore that company. So if you see most of the stocks here, except VIP Industries, all the stocks have been giving positive returns on the capital that has been deployed. And I also try to look at P's, which are kind of, not very high. And then I also give the entry price, the stop loss, and how do you trail your stop loss. I also give that, right? Because you want to protect your profits as when the stocks move higher. And if it's okay if the stop loss hits, but you want to ensure that you try to protect your money as much as possible. That's the key risk or the key point that everyone misses, because of which you lose money in markets. So you don't do that. And if you haven't, if you still don't know about markets, do follow me on Twitter, on YouTube. I have a lot of good videos. There's been a lot of good feedback. We've crossed 1,000 subscribers, and I'm sure you don't want to miss the learnings that we have in our daily series that we do. So daily at 11 o'clock in the night, I give my Nifty outlook for the next day, and also I trade with real money of 1 lakh, where I cover where I trade stocks, and that's called the Trade with Trendline Investor series. And some of the stocks have done really well. Example, Lakshmi Organics, which we bought last week, is already up 35%, and we have an 8% allocation towards it. And you don't want to miss such kind of picks, so don't forget to subscribe to my channel. The link is in the comment section or description. Go ahead, click that subscribe button, hit that subscribe button, right? So this is what the sheet that you have to refer to in case you're subscribing to you are investing based on my recommendations. So this is purely for educational purposes, so take that, and don't consult a financial advisor in case you're investing in my stocks. So yeah, let's jump into the stocks now. And this week we have 4 stocks, starting with Heranba. Now Heranba is a company in the agrochemical space, and this was recently listed in the market. So it was listed, I think, in March, few months back, in the month of March, and since then the stock went down, and then we're kind of going sideways, and now this is probably an ascending triangle breakout. And if you just look at the volumes here, the volumes have been decent at this point, and I think we have kind of breaking out today, which is resitting. Now this video is being recorded on the 16th of August, and it will be probably posted sometime this week. But if you don't want to miss the stock recommendations, go and subscribe to the newsletter, because that is sent every Sunday at 4:30, and this video is recorded a little bit later, so don't miss that. And go and subscribe. Now just looking at the newsletter itself, also I've given the fundamentals here. Now mostly the reasons that I invest in a stock is if there's increase in sales and if there's increase in profits, and if the profits are increasing because of the operating margins increase, that's really a very good sign. And that's why I look at companies like Heranba, where I try to find the right entry point with the least stop loss, and I enter. So today, this was the first day after we recommended the stock. It's down, but it's kind of retesting that zone. But this is a nice trend line support around this point. The stock has kind of reversed around that point, and on top also it kind of couldn't cross the zone, and it crossed that zone last week. So the stock looks good. It looks fantastic, and it's a new stock from the IPO space, recently listed, and it's from the small cap space. It has just 3,300 crores market cap, and it has a very good ROC of 45.4, and it's fairly valued at 21.7. Hardly has any depth, and look at the profit and sales, they've been excellent. So that's the first stock, and I'm here. I keep a stop at 725 for targets of 1,000 and 1,250 in the next few months or next year or so, right? So we're looking at somewhere around, that's the first level, so around 940, 950 and 1,000 and 1,050 levels. So that's the first stock. Heranba Industries looks excellent from the agrochemical space. Excellent sales, excellent profits. Now let's look at the second stock, which is NMDC. Now NMDC again is from the mining space. So here, if you see, this company is in the iron ore, diamond production, sponge and whatnot. So they are a decent company. In fact, a very good company. It's just that it's a PSU company. That's why the stock has not been performing for the last 13-14 years. But again, it has been giving good profits at 18% CAGR. 10% sales has been growing at 10% CAGR every year, and the stock is just trading at 6 PE. Now here by PE, I mean that if the company is making some X rupees, and the market is willing to pay 6 times that X rupees. So if the company is making 10 rupees earnings or profits, the market is willing to pay only 60 rupees, which is kind of not that high. But whereas if you've seen in Heranba, that PE is 21 rupees. So if the company is making 10 rupees, people are willing to pay 20 times of that particular profits that the company is paying. So it's not very highly valued, and the stock has recently broken out. Let's look at the charts. So I'm just going to the monthly charts to show you the breakout which has happened, right? So if you see here, so the breakout happened in the month of April 21, and then we went all the way from, that was the breakout on 140. We went all the way up to 200, and then last 3 months we've just been going sideways. Now that's a 13-year breakout, and that's the first time the stock is showing signs of uptrend since it listed in 2008. Right now, just switching to the weekly charts just to give you that understanding of how it's consolidating. Now, this is the consolidation which has been happening. After that move down, it is not hardly gone down, right? It's just been going sideways. And if you go to the daily charts, you will also see that much more clearly, right? And this is probably a bottoming out sign, and we might probably head higher from here. So the stock looks really good. From here, I think even some big people have taken stake in this company. Keep a stop loss of around 150, and we are looking for targets, of around 300 odd levels. So I'm looking for targets of around, here. So that's a major resistance zone, and I probably feel that the next few years the stock might head towards this level. Now, just because you see that the stock is right now 170 and is going to 300, don't put all your money in one stock, because there is a stop loss, and the stop loss might be hit as well. So in case you don't want to lose much in the stock, just allocate a 5%, and in case it moves higher and when we revise a stop loss, then you can go and invest more in the stock. So that's the second company that we're going to look at today. The third company that we're going to look at is Redington India. Now this company has been in India since many decades, and this is one of the primary distributors of some of the most iconic tech products, and it has some of the biggest distributing channels in the world. And so this company, if you see, it was listed in 2007, and it has just been going up. Predominantly the trend has been up, and recently it broke out from this 14-year parallel channel. Now that's what excites me, because a parallel channel breakout means that the stock can head much higher, and the space is just picking up for the stock. Now, just taking a quick look at the fundamentals. Now, as I said, it's the second largest distributor of IT products in India. It is a premium distributor of 200 plus global technology vendors, right? And the sales and profits have been increasing steadily, and the borrowings have significantly decreased from 2,700 crores to 622 crores. The interest cost has come down, and maybe that's one of the reasons. I'm not really sure. If you do know the reason why the stock is moving up, do let me know in the comment section. Or if you know even the reasons for NMDC and Heranba, do let me know in the comment section. But that's the reason why I'm picking the stock, because it has given a 14-year parallel channel breakout. Now, if you see this channel, middle channel is perfect, where every time the stock reverses, and then it gave a breakout. Now, if you see, it tried to cross here in 2019 September. Until now, it didn't cross for almost this time, and then it gave a breakout and just moved one way up. So this is a nice stock that I'm looking at. And if you want to invest in the stock, or if you're going to invest in the stock, let me know in the comment section. But here, keep a stop loss of around 300, and I'm looking for targets of around 450 in the next 1 year or so. So that's the third company that I highlighted in this week's newsletter. And the last company that we're going to look at is Kraft, which is again another IPO company. Now, if you've seen of late, I've been giving a lot of IPO companies because they are forming nice setups and they've been breaking out of nice patterns. Right now, Kraft again has some of the most premium brands in India, or some of the most kitchen brands like the Pigeon. Right now, Pigeon most of would have seen. I think we have the Mixie brand, then there's a Gilma premium brand, and it has a lot of other products, and it's in the consumer durable space. Now, this could also be a long-term bet. Now, if you want a long-term bet, probably you should allocate 2.5% and then allocate to 5% once it has a massive consolidation, then it breaks out. But for now, the trend is very clear. And this is a consumer durable company, and I'm very confident that this company might do well in the coming months and coming years, right? And also, if you see, it posted a record 859 crores in sales and 81 crore profits in 2021, and the margins have significantly improved from 5% to 13%. Also, remember, this company was loss-making company until FY18, until financial year 18, and in the last couple of years, this company has made tremendous profits, right? The profits have literally jumped, I think, from nothing to 81 crores. Well, that's a very significant jump, and that's also one of the reasons why I'm recommending this company this week. You can also go through the results here and screen it out in, and you would see what I just mentioned, right? So it was posting losses until 2018, and right now it's at 81 crores profit from nowhere, right? So that's why this company is interesting. And also, if you see, it was recently listed in March this year, and it gave a IPO based breakout here around this level here, and it went all the way up, retested, the breakout. Now, this always happens. Don't freak out when a stock breaks or then again comes back to that level, because that's the usual behavior of markets. And then again it broke out from here, it went high, and then again it's kind of trying to break out on that zone. That's the reason why I have given this stock as a recommendation. The stop loss for this stock is 730, and I'm looking for targets of around 1100 levels in the next 1 year or so. And also, since this is in the consumer durable space, you might want to look out for this stock probably from an investment perspective as well, because over the next many decades, this company can really become a big company because it already has some of the big brands and it can do really well. Right, so these are the 4 companies that I've recommended today. If you really like this video and if you like my analysis, or if you're planning to invest in these stocks, then do let me know in the comment section. But before we end this video, I just wanted to highlight a small blog that I've written this week, which stresses on the psychology that you must have to sustain in markets. Because you can invest in all these companies, but let's say you invest in 10 companies and 5 companies are going down. Let's just price is going down and it went below your buy price, and there is some point you have to get out of the stock. And most of us don't get out of stock because we can't accept that we have to book those losses, right? That's one of the main psychology reasons that many of us lose in markets. Now, so don't forget to read this blog post. So this blog post is really short and sweet, and you want to read it. But apart from this, I also mentioned some books which you might want to refer to in case you are a trader, especially. Then these books might help you. Apart from this, I also have many articles which you want to go and read. If you're a beginner, especially, start with this, tools to get started investing, and then move to this, and then you can move to this. And also read my newsletters every week. It might really give you a good feel of markets. It might help you understand the stocks, how I pick the stocks, and what kind of stocks I pick and all that. And don't forget to join my YouTube channel, because Trade with Trendline Investor series is the best series for a trader, especially if you're a beginner in the markets and losing money. That's one of the best places to learn how to trade and invest in markets, and it's all for free, right? So that's it for today. I hope you enjoyed these 4 stocks, and if you're investing in these 4 stocks, do let me know. And don't forget to subscribe to my channel before you leave this video, and don't forget to hit the like button of this video. Okay, thank you and have a good day. Bye bye.